It's Lee Goldstein from JOBB, and I'm testing gold on retail sales. Here's my setup. I'm using a bracket of 7, which is pretty big, but it's volatile. I'm using an entry time of 8:29.59. 2 targets for 4 ticks, 1 target for 25 ticks, and a stop of 11. Okay, that's my settings. First test is May 12th. I've also got the range chart handy.
Order pending. Order filled.
Okay, very quick trade, took me in and out. So what you have to do is you have to look at the range chart at the exact time of the trade. And what you're looking for is you want to make sure, with the data box also, the data box, you're looking at time and volume, number of contracts also. Okay. Sometimes you have to click the chart to get the box to work. So the time of our trade was 8:29.59. So you find the candle that's closest to that where our trade took place, which is right here. The trade took place at 8:30. And what you're looking for is whether or not the index moved enough ticks to break the bracket of 7, to the opposite side that we were taking in. In other words, we were taking in long. Was there a move short greater than 7 ticks, whereby we might have been taken into the trade short? That would not have happened in sim, but we could see if it would have happened by looking at the range chart. Okay, it didn't happen. You can see that the index pretty much just moved up. It did a little pulling back, but nowhere near it was after we would have been in the trade. Okay, so the thing you're using the range chart for is proper direction of the trade, and you also try to check volume as well. So we would have gotten filled. We certainly wouldn't have been filled anywhere near where it shows we would have been filled. We probably would have been filled up here. So you might have gotten taken out on your first 2 targets, and you might have been in the trade on your second target looking to get out or waiting to see what happened depending on the news result. But overall, the first trade with gold looks promising. So now I'm going to go over to March 15th. March 15th, same setup, 7 tick bracket.
Order pending. Order pending.
Not much of a move. You could see just nothing. It just didn't do anything on that move. So
Order filled.
But there was a little bit of follow through to the downside. Now my stop gets moved to break even -2. And look, it's okay if you don't get a gigantically fast move. That's going to happen. You're not always going to get an explosive move. So in this case, I would probably bring up my target because we're not getting any movement towards the target. Right? I've made $90 roughly. I probably wouldn't have been filled exactly where it said I was because it's sim. But again, what we're looking for, we got some follow through there. What we're looking for is direction. Okay? You're looking for direction. So again, at the time of the trade, which was here, 8:30-ish, 10 seconds passed, there was only 1 or 2 ticks of movement short where we were, okay, short, which was the direction we were put in, okay? We were put in short. Let me just make sure. Then we had some follow through. But here was the trade. The trade was early. It was 8:30.03. We were put in short. What you're looking for is to make sure that also you didn't have 11 ticks to stop you out on the range chart. Or once we were in, did we have movement to the downside? Okay, very jerky here. Okay, you can see very jerky, but taken in, looks like direction was okay because it didn't really pop. It just dropped us in and then almost stopped you out there. You got like about 7-8 ticks. We had an 11 tick stop, so that kept us safe. And then eventually it dropped a little bit to hit our first target there. Okay. Anyway, what you're looking for, again, you're using the range chart to try and find direction. You want to make sure your direction is correct. You're not looking for money. You're not necessarily looking for profits. You're looking for direction. Now I'll do a quick test. February 15th, same setup, same everything.
Order pending. Order
you could just see that gold just pops. It really pops on retail news. Okay, so that's what we're looking to see. It really, really moves well on retail news, generally in one direction. There's the box of the trade, 829.59. You could see it doesn't go long to take you in on the opposite direction. It just pulls you in short and the direction is correct. It's low volume, so that's why it's going to take a little bit of time to get filled. You're not going to get filled where Ninja shows you on Sims. Your profit's going to be lower. Okay? You're not going to have $690 in profit. Nowhere near it. But we're looking for proper direction, and it looks like gold will work with retail. So 3 reports where it looks like gold will work. So I can live with that. It seems like it's probably worth the risk. Now I'm going to do the same thing. I'll test 2 FOMC reports just for fun with gold also. FOMC on May 3rd, I'm using a bracket of 8. Let's see what happens on this. I've tested it before. Gold was pretty volatile. So the report's been released. Pretty big bracket. And that was May 3rd. Got to move down, filled the first target. You got to be aware. Now it would have been filled. It got past it. So you got to keep in mind with Sim you have slippage. So it was a little bouncy, not a great one. This would not have been an easy winner by any means. It went both directions. So that one would not have been a winner necessarily. March 15th, FOMC. The bracket might be a little big. Now that was an immediate reversal, but was also Sim, but looked like it would be unsafe. Looked like that would have been unsafe. The move was after. Okay, you could see the move came later. The move came later. Maybe gold is not, so this gets you thinking, maybe gold is not a right at the moment of the trade. You follow me? Maybe it's not at the moment of the trade. Plus there's another thing going on here. If you look at the chart, we had central pivot and the high of the day magnetizing the chart up above. So, you want to pay attention to that stuff before the trade and maybe just take a long trade. Those are things you want to think about. But gold would have looked like it might have been unsafe on that report, on that month. Okay, so 2 months in a row, May and March, gold really looked to be kind of unsafe with the FOMC announcement. So I certainly am not leaning towards trading it. Here's the 3rd month, February 1st. A quick fill. I think our time is difficult. Gold looks to be very whippy during the Fed. It whipped it reversed significantly all 3 of the trades. But look at the late move it did this month, and then it had another late move the month before. Maybe, just maybe, there is a trade with gold. Gold loves that PP, doesn't it? Maybe there is a trade with gold a couple of seconds after the Fed announcement. I'll bet you if we change the timing, you might find yourself a trade. So that's something to think about. That's what our testing showed us for today. I'm not going to do it for tomorrow. Got to do more testing. For tomorrow, I'm going to do the trap trade on bonds, but I thought you might enjoy the testing on retail, which looks good for gold, and the FOMC, which does not. Take care. This is Lee Goldstein at JOBB doing some quick ninja replay testing, gold, FOMC, and retail news. Take care. Give me definitely a thumbs up if you like this video, please.